My name is Thomas, and this is For the Common. For the Common is all about arming everyday investors with the tools and information they need to be successful. And one way to do that is with a transparent look into money management. And specifically, we're talking about how I personally manage my own money. But the important thing that I want you to take away from these portfolio reveal videos is that the mission of this video is that it's about you. And the goal is that with this transparency, you'll be able to learn from my mistakes, but also learn from my successes and hopefully get a little bit more confident in the fact that you can be a great investor and do it all by yourself. And that's what For the Common is all about. But importantly, in every video, we talk about the rules of the road for the channel, which are you have to do your own homework and you need to make your own investment decisions. Do not follow an investment decision that I make just because I make it. I get things wrong all the time. So check out the disclosures in the description of this video if you want more information. So if you caught my last portfolio reveal video, On the Verge of Tears might sound familiar. I'm kidding, but not really kidding, but mostly kidding. There might have been some tears in there. That was a really hard video to record, but I also ended it with a hope. And that hope was that I would begin my next portfolio reveal video with a smile. And I'm happy to say the smile is right here. So let's jump into my portfolio. So I'm really happy to report that there's been a rebound. And if you look over the last couple weeks, that March 14th low was right around the time that I recorded my last video. The account value is around 534,000. And then appreciated over the last several days to about the $1 million level after today, which is March 24th. And if we go to the longer term view, you can see that big run up to about 2.1 million and then the very humbling decline all the way down to me ultimately getting a margin call, which was a tough situation, but survived it and now, at least for now, on the mend. So we'll see if that holds, but I'm going to switch now to the holding view of the portfolio. And the first thing that I want to point out is that the excess liquidity level in this portfolio is in a much better place than it was in the last video. And I know we've dug a lot into margin. So just as a very quick update, the maintenance margin level for this portfolio now is 560,000 and the equity value is that 967,000. So this number versus this one, you get the excess liquidity of around 407,000. And that means that I have a lot of space in the portfolio now before I get a margin call. And that's amazing because for a while there, I was worried and biting my nails every day that I was going to be getting a margin call. And now I have a $407,000 buffer before I get a call. So very thankful for that rebound. And you might be wondering with the rebound, have I been buying more stock? And the answer importantly is no. I committed in some of my margin videos that I was going to use margin in a more disciplined way. And I wanted to keep the leverage level at 1.2 million. And so you can see that here, the negative cash balance is negative 1.2 million. And I've stuck to that, which good for me. I'm sticking to what I committed to. And then if I look at the holdings here, as I scroll through, there have been a lot of very substantial rebounds, which is awesome. Glad to see that happen. But there are still a lot of stocks that are off pretty substantially from their highs. So I still think there's a ways to go for us to rebound, but who knows where this market's going to go in the short term. It certainly is proving every day that it's very volatile. And as I scroll through as well, I want to highlight that, as I mentioned in my FTC replies video, I like to think about investing as a difficulty level. And this portfolio is on legendary difficulty, and it's very aggressive because of the leverage that I have in the portfolio, the debt, and because of the stocks that I own. There are a lot of technology companies that are very high growth, and I want you to keep that in mind. I encourage beginners to invest on normal difficulty, and this is legendary. This is very aggressive. So if you're comparing this against your allocation, be aware that this is a legendary difficulty portfolio. But my plan into the future will be to continue to reduce leverage down to 1 million. So that was the number that I wanted to hit. So as these companies rebound, for example, like Crowdstrike is now 98,000, I'll probably trim some of these winners over time to reduce that to $1 million. And then I'm going to stick to that $1 million level. And then again, as this rebounds and the stocks do well, I'll continue to trim the winners, and I'll reposition the money into companies that I had to sell because of my margin call. And so that would be companies like Costco, Disney, S&P Global, Thermo Fisher, Boeing. I had to sell them, and I think they're great businesses. So it stinks, but I want to buy them again to rediversify this portfolio once things kind of get on a firmer footing over the next several months. So that'll be my plan. And then as well, I'll be able to hopefully have some space as well. If there's some opportunistic buys that I want to do, I'll be able to do that by, again, trimming winners and not taking on more debt, no more margin calls. I thought it would be interesting to go through my top 10 holdings in a bit of a speed round and talk about why I own them, why I have conviction in them. But I also want to encourage you, if there's another company that you want my comments on, or if you want me to do a deep dive on one of these companies, please, I encourage you to include that in the comment section below. And I would love to talk stocks. That's my favorite. So absolutely encourage you to leave a comment, and I'll make sure to get back to as many of them as I can. So looking at the holdings very quickly, I want to talk about the investment style for the common. Very briefly, it's owning companies for the long term, and as well looking for companies with really three main characteristics, which are first, very bright futures, and then second, companies that can stay in front of competition, and then third, companies with capable and focused management teams. And so when you look at Amazon, I think this is a great example of a company that is a little bit misunderstood out there, because Amazon, everybody thinks of the e-commerce business, but for me, it's all about the AWS or cloud business at Amazon. And that's growing very, very quickly. And it's really the forefront of where technology and software is going, or things living in the cloud. And interesting as well for Amazon, if you look over the last, even really 2 years for the stock now, it's really been flat. It hasn't done anything. So as FinViz, my favorite site that I highlighted in my FTC replies video, loads here with its bad ads, you can see, this stock really hasn't done anything. So for me, it really feels like a company that's prime for good future success because of the bright future and because the stock is consolidated, and it's a pretty low PE. I've never seen that PE that low for Amazon. And then looking at my next one, Snowflake. This is a really interesting business that is very, very expensive, and it's on the forefront of what's called a data lake and these big database systems that live in the cloud now and allow big companies to run amazing analytics on the data that they have and do it in a way that they've never been able to do it before, which is harnessing the power of the cloud to run the analytics. And really neat feature about Snowflake as well is that they're talking about data sharing over the cloud. So if you think about companies being able to share data in a way they've never had, it's a really compelling story, but you're going to pay a very expensive price for this stock. You can see it's been a pretty volatile ride. Relatively new company. It trades, it's no PE, no earnings. It's a very, very, very expensive price to sales multiple. So this is probably one of the most expensive out there, but a company that I believe in for the long term. I think has an extremely bright future and an awesome management team, and Frank Slootman, the CEO. And Salesforce, I've talked about before. Salesforce is an amazing business, and I think a really great highlight of a company that is going to stay in front of competition with their just amazing CRM. And I've worked at businesses where they have built all their contact lists and all their notes into Salesforce. And it's a clear indicator that my old company to try and get off of Salesforce would be extremely challenging, and that's the stickiness of their business model. And they're also doing a lot with respect to M&A, mergers and acquisitions, to try and stay competitive and to drive future growth. And so CRM is the ticker. It's a really great company, and again, hasn't done that much over the last year or two. And again, wow, that's maybe not right, but really low price to sales multiple, in my opinion, for a business that's still growing about 25% year over year. So great company. And then Tesla, I mean, I love this business. I wish they didn't, I wish Interactive Brokers didn't sell a lot of Tesla that I had at 800, but that's a margin call for you. And it's been a company, as you can see, I originally bought this stock when it was at $60. Fortunately, those are the shares that they sold in my margin call, but one that I've owned for many, many years. I still very much believe in that. The EV technology that they have, it will be the cutting edge for many years because they have such a lead on other manufacturers, and I really believe in the future of EVs. So a company that I believe in. I think Elon Musk is an interesting character, but obviously brilliant. And then Google, you've got the moat around search, you've got the moat around YouTube and a lot of their other businesses, but also their other bets division where they're investing in either healthcare or Waymo, driverless technology, where the business can continue to grow, I believe, in the future with their other bets division, but also just with their normal business because they have such a good competitive advantage on the search business. It's just a company that's been extremely profitable and done very well over the course of time and still growing quite quickly. So love Google. And then others, Microsoft. It's one that I've actually been buying recently and love Microsoft. I remember looking at Microsoft when it was $40 and Satya Nadella was becoming the CEO. And it was uncertain if they were going to figure out cloud. And over that time period, it's absolutely proven out that Microsoft has figured out cloud, and they continue to do extremely well as a result. So if I can pull up the stock chart here, show it over that time period, and here it is down around the $40 level where I was looking at it. And yes, I feel like a dummy, but company still trades at a very attractive price to earnings multiple, in my opinion, 28 times, with growing revenue 20% year over year and extremely high margins. So, and off 13% its recent high. So a company that I think really has a bright future, deep competitive advantage, and looks pretty good from a stock price standpoint. Crowdstrike, really great business focused on cybersecurity, and it's a company that I've also owned for a long period of time, been buying more, so I'm only up 100% in it, but really an amazing business that is focused all around the Falcon, a cybersecurity platform that they've built. And it's about identifying threats early and making sure that people who use their system are connected so they can really identify kind of across enterprises. It's a really interesting business, a very impressive leadership team. So I like CrowdStrike. Datadog's one that I had watched for a long period of time, never pulled the trigger on, and recently bought it. I'm only up 4%. And I should have bought it when it IPO'd at 20 or 40 or 60 when I saw it appreciate. But unfortunately, I missed the boat on that one. But it's a great company that has done a lot with respect to software observability around security, and one that, again, has just been growing incredibly quickly, 83% year-over-year growth their last quarter, but again, no earnings and very expensive on price to sales. So this is, again, a legendary difficulty stock. And then Trade Desk, one that I'm actually up, I've kind of enjoyed his show, up 1,200%. Wow, that's been really incredible. I haven't bought a share since I bought these shares originally, and I bought $5,000 worth. It's now worth over $75,000, and this stock was recently $100 not that long ago, so that was up a lot more than that. And it's a business that I absolutely believe in with respect to programmatic advertising. So when you think of loading Hulu or not Netflix, they don't have ads, but Disney Plus in the future where they have ads, that's all powered by Trade Desk, and it's an exchange for ad viewership. So you see all these ads that I have, it's very possible that Trade Desk software is powering the auctions that go on behind the scenes to pick which ads show when. And I have no idea why FinViz picks these ads. It's terrible. But if that's Trade Desk, shame on you, Trade Desk. But regardless, it's a business that's been very good to me, and I think it has an extremely bright future because of the importance of ads. And then last is NVIDIA. I love this company as well. Recently bought it. I'm only up 4%. Hey, I'm up. Good. It was down a lot before. You're just in the corner of some really substantial technology tailwinds around data centers, alternative intelligence, or artificial intelligence, around autonomous driving and machine learning. So get all the buzzwords out. They mix up in my head sometimes. But the company is really empowering so much of that with their GPUs and the technology that they have around their GPU intellectual property. And it's just proven, again, an absolutely incredible stock, where I also looked at this one. Gosh, it was $40 as well, but so long ago before they did a bunch of splits. So this is probably back in 2015, and it might have missed the boat on that one. But one other principle that I believe in, it's never too late to buy a quality business, and I think the future is extremely bright for NVIDIA, continues to be, and they have a really impressive executive leadership team. So that was the speed round. Hopefully it was helpful. I'll continue to scroll through my portfolio. Again, feel free to pause. If there are questions on companies that I own, I would be more than happy to take them. Or if there are questions about companies that I don't own, also please include that in the comments, and I would be happy to touch on them. And that's it. That's the portfolio reveal for March 24th, 2022. We had the equity market rebound, and thank goodness it was a wild several months, but hopefully the bottom is in. We will see, but it'll continue to be a very interesting couple of weeks and couple of months, as there's so many cross currents in the market, and who knows where we'll end up in a couple of weeks. But hopefully I will still have the smile on my face for the next portfolio reveal video, and I hope that the transparency has been helpful. If you got use out of the video, as always, I'd appreciate a like or subscribe to the channel. The support means so much to me, so I really appreciate you checking out the video, and until the next portfolio reveal video, thanks again. And that's it. That's the